Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, March 13th, 2025. So, the Bears are just, they have their foot on the bull's head, and they're not letting it up at all. We did get a bounce today, but it was short-lived, and we ended up coming back down and testing the highs, and it really, the lows, and it really wasn't that. It was just a really quick little up and down on it, but what I explained in the premium report was that, we're going to get a bounce. This is a 10% move that we've just seen to the downside with really out any type of retracement at all. So what happens with this? And it's the same when they melt the markets on the upside. The longer you think of it like a beach ball, and you're holding it under, or just a regular ball, and you're holding it underwater, and the further you push it down and go down on it, and when you let it go, the higher it's going to go. The same thing kind of applies to the stock market. Is when you have these moves where there's no types of backing and filling or digestion of the move. When it does come, the lid's gonna pop off, and that's it. Does it mean that we have to see a low right here? No, we could see it next week or whatever, but in the low may only be a few days. That's the thing. I'm not looking for this to be the actual low in the market. I do believe that we have a little bit of time to go before that, and we're going to probably be at much lower levels. But the shorting right now, it's worked fantastic. It really has. I mean, we make the trades both ways. In the fund, I'm always market neutral on it. We actually had a good day today. We did 37.50. So, to me, even though I'm saying that I'm expecting a bounce, I'm still trading the market neutral and just taking advantage of the move that it makes. So, just being my experience and trading through the dot-com bubble and the financial crisis, the one thing when people get very comfortable on one side or the other, especially when volatility is high and everybody's just looking down right now, these reflex bounces can go very high very fast, and that's what I'm trying to have you guys avoid. I'm not saying do you have to get bullish on this market or anything like that at this particular time, but you have to be just weary of that ball popping up and shooting up 20 feet in the air, and that could be that type of move that takes the S&P somewhere up into the 5700, 5850, and everybody's just looking for this to go lower because now you have all the talking heads talking about a recession, and to me, when I listen to these people on the financial news stations, what I go with is typically what they're telling you is the exact opposite that they want you to do. If you go back just really a month ago, remember what they were all telling you is that the hard trade right now is not being long this market. You just got to get long everything. The fundamentals are good, blah, blah, everything. And what happens? The market drops. So now they're all coming on saying we're going to have a recession. The tariffs are, they're going to destroy everything. And the problem, like as I've been saying, building a bear case on that and going ultimately bearish on the market because of tariffs, it's financial suicide, honestly, because as I've been saying, that Trump could end these tariffs in 1 minute. And what happens? You're short this market, with everything, and next thing you know, we're up 400 points in 2 days. So, I think the street is they know this. They just want to get in at better levels, and so they'll keep putting this fear in it. They'll keep selling it. Watch the capitulation go to the downside, and then they'll start buying. And I wouldn't be surprised by sometime in early September, maybe even October, that you're going to see the S&P at new all-time highs or at least testing the highs. So, and then the tariffs won't be a thing anymore, and they'll probably be looking for what else to point the finger at Trump. It's just the way this is. We just keep reliving the same stuff. But what I'm saying though with the tariffs is, don't become overly bearish on it because they could end in a day. Going back in 2022 when we had inflation at 9%, that's something you can't just tuck back under. They built that. They spent trillions and trillions of dollars on nothing except propping up our economy, the stock market, employment numbers. And so it really was, a fake economy that was being held up by the government, by our tax dollars, basically. So this is a cleanse that had to be done. It's just there. And I know, you have a lot of these people that, are saying we're going into the new bear market and this and that, but I just don't see that happening right now. I mean, the people that are getting, laid off and stuff, they're government workers. We have 2 million or whatever, 1 million workers out there. We don't need them. There's nothing out there that needs 1 million employees. There's not a single company that produces some mass stuff that doesn't even have anywhere near 1 million employees. So them scraping this out, it's good for the tax dollar and it's good for the taxpayer because they're trying to lower our taxes. And this is all going to come into fruition with it. And on top of that, now they're trying to do massive cuts in taxes because they're doing these tariffs. They know it's going to be a one-time lift on inflation, but if they can cut taxes in the meantime, now it's a net zero, and we're cleaning out, we're making our government more efficient, but we're also we're going to be building a good economy on it. So I think that this is well known. And as I said, can we go into a recession? Absolutely. Because if you look at what a recession is, and I'm sorry for going through all this, I'll go through the reports on it, but I just want to explain because, I'm getting a lot of emails about people panicking, and I'm telling you, don't panic on this. You panic when inflation's at 9% because they can't just turn that around. It's just nothing but what they can do is spend more money and from there try to it just really boost the economy. But when you're stealing from Peter to pay Paul, it doesn't work that way. So this is a necessity. And as I said, the tariffs are the big talk, but they can end tomorrow. So to get overly bearish on that is, I think it's a financial suicide if you do that. So let's get to the markets. Do I think the low is in? It could start today. It could have started with this. It could start. It may come down and it starts tomorrow. It may even be Monday. But it's going to be a 3 to 5 day, maybe even a 7-day rally that is going to explode higher. And once it's up there, now people are going to start feeling good again, and they're probably going to pull the rug out again, and we're going to take out these lows, and we'll probably get another bounce, and they'll take them out. I'm not looking for an actual low coming until either late spring or early summer, and we could be. You can see the S&P possibly trading all the way down at the. Here's the daily. I mean, we could. I wouldn't, count out that we're going to be trading down at the 5,100 or possibly even down at the 49.50. This makes sense right here. So if it comes down there, this is going to be your buying opportunity of in a time that we have not seen in a very, very long time. So this is really what I'd be. I'm just showing the resist, but these are your ultimate where. I believe we could see the S&P heading down to by the time we actually make this low, and it's going to be any of these pivots right here that I'm going to say. Like this right here is going to be from there, and if we come all the way up here, look at this. We're talking about almost a 1,300 point rally if we came up and tested these highs. But I think anybody buying right here, it's dangerous because I do believe that we're going to get a bounce up. Like I said, maybe the 50-day moving, 200-day moving average. Maybe we come up and test the 50-day. But it's still the end result is going to be down here. And one of the reasons why I'm looking for the bounce or just a retrieve of what we've got here is, we have these technicals that are down here. So we need a bounce that's going to come up, that's going to start lifting up the momentum indicators. So then when we come down here, that's going to give us the bullish divergences and give us a reason for any one of these pivots to drive us back up. So let me go back to this chart because what I had put in the morning notes was that, we were kind of in no man's land where we could go, the the bulls had to break through this resistance zone to get up here, and the bears needed to break through this resistance zone to possibly come down and test that 54.50 level. So when the bears took out the 54.30, it was a suction cup right down to the down to the 5500 level, and that's where we got a bounce on it. So now what it is I said I was leaning on the bear side because we were overbought and we didn't have any bullish divergences. So now that we took this out, we have the bullish divergences. And I think that the same thing is going to happen on the daily, where we get that bounce. This is going to push up on it, and then from there, when we come down and make the ultimate lows that are going to that will take place, later in the year. Well, not really, not that much later, but when they're here, we're now going to have buy signals, and that's going to give us the fuel to move things higher. So that's pretty much that piece. I don't even need to go. I'm just trying to see where I am. Hang on one second. Alrighty, here we go. So 15-minute chart. We had some bullish divergences here. We could see them forming right here. Basically, we're right back in that where we have a little zone that's in place, and really this is what you can trade is which way this breaks. So if we have a break to the downside, then again we're looking at a move down at that 54.50 level, which is 50 points lower than what this is on it. If we break to the upside, then we should have a move coming up to the right around that 55.87, probably even up to the 5600 level. Pull back, and then if as long as they could hold support, that's what I'll be looking at, moves coming somewhere up into these levels. But right now, this is the first thing the bulls need to do is get it through here. If the bears win and they take it down, be a little bit careful because we have the 54.95 is support, and then there's also some down at the 54.50. So that's really about it. I think that we have to be, I would just be very cautious, just shorting blindly, because as I said, I've been involved in some of those when we had these massive short covering rallies, and it is not a fun thing, and you lose a lot of money really fast if you're caught on the wrong side. So with that, I'll talk to you guys in the morning, and have a great night.